Welcome to the FarrCast, providing you insight into Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us here again this week on the FarrCast as we cover Wall Street, Washington, and the world. It is, believe it or not, ladies and gentlemen, the 29th day of May. We're at the end of May, second month, second quarter. Here we go. The year's almost half over. And what do we have to show for it? Dear Gussie, as my grandmother used to say, dear Gussie, we have a lot to show for it, but it's a whole lot of get up for just a little bit of go, was something another old aunt of mine used to say. That's a lot of get up for a little bit of go. For all that we've been through, stocks are still 21 and 22 and a half times earnings. The economy continues to expand. The world, despite many predictions, has not yet come to an end in the first 5 months of 2025. And kind of the republic's holding on. And as the poem The Desiderata points out, the universe is probably unfolding as it should. Now, with that said, and as I look at headlines this morning, we had Liberation Day tariffs halted last night by a court of international trade. We're going to parse through which tariffs are coming through, we're not going to parse through it on the FarrCast, folks, but the courts will and the administration will. We are seeing an ongoing decoupling in trade with China and a little bit with Canada, a little bit with Mexico, but particularly with China. So we're talking a little bit more nicely this week than we were last week, but there's still a bit of a decoupling. That's a bit of an economic headwind. We're hearing from the president that there are advances being made in conversations with Iran, and he's asking Israel to hold off, even though there are no real advancements being made between Israel and Hamas, particularly if you're Hamas or Palestine. That's not going much better. He's very frustrated with Vladimir Putin and Ukraine because Putin's not listening, and Putin's proving to be Putin. Mr. President, this has been the Putin the rest of us have always known, and he's still doing it, and he's going to keep doing it. There's news about clemency, there's news about imports, and there's news still even about climate change in Alaska among the headlines this morning. How do we sort it all out? Well, we tend to step back. Folks, we tend to step back, and I want to start with Jim Lebenthal, where I basically started this morning. Everything seems to be, in general, at 5 months into it, intact in the economy, the ups and downs. NVIDIA reported earnings last night. The earnings report overall was pretty good, and the stock is called higher this morning. That's one of those big seven names that we tend to follow. That's not a recommendation, folks. That's just a fact. They reported earnings last night. The entire market has drifted higher. A lot of the laggards have started to perform, not all of them, and there are still opportunities out there, but this market isn't cheap. So we step back, and in spite of the yelling and screaming here at the fish market, we pay attention to the price of fish. Jim Lebenthal's a partner at Cerity Partners, CNBC contributor, and let me tell you, he pays attention to the price of fish. Good morning, Jim.
Good morning, Michael. What a terrific intro. You fit something in there that I think bears repeating. The universe is unfolding exactly as it should. And if ever, that's a philosophy that I deeply believe in.
I do too.
But if ever there was an industry that was more out of touch with that philosophy than finance and investing, I don't know what it is. Because you're right, we pay attention to the price of fish. And the price of fish changes day by day, hour by hour, tick by tick. And today we're living in a great example of that, where just yesterday I was writing a piece for our firm explaining that the concerns about the federal debt and deficit level, while understandable, might be a little bit overdone at this point in time. The one big beautiful bill, with its deficit increase of on average $230 billion a year, was, as of yesterday, nicely to be offset by the current run rate of tariffs, which is 190 billion more than a year ago on an annual run rate basis. So the theory that tariffs would pay for the tax cuts seemed to be showing up in the numbers. Then, as you just referred to, we got a ruling last night that throws into doubt the tariffs. Now, let me be clear for all our listeners. I think the tariffs are a terrible idea. But this was the hand that up until last night we were dealt. And we've been
Yeah.
playing that hand as best we can. All of a sudden, the dealer has said, let's reshuffle and redeal. I might be speaking a little bit exaggerative because there will be appeals, et cetera. And frankly, I do hope that tariffs are done away with. But let's be clear, then the whole Rube Goldberg of tariffs offsetting the one big beautiful bill has to be redone. So we got some wood to chop in front of us. And it's helpful as we chop that wood, axe stroke by axe stroke, to remember that the universe unfolds exactly as it's meant to be. And in that unfolding of the universe, to date, equity markets have marched higher decade after decade, and I don't think that's going to change.
The egotism in our business is as much our Achilles heel as anything I've ever witnessed over the years. We think we're so important. We think we're so smart. We think we're going to come up with that answer that Warren Buffett didn't come up with, that generations before us, that Graham and Dodd and on and on. We're going to figure it out. And by the way, we're going to figure out what we need to do in the next 20 minutes about what just happened in the last 20 minutes because it's different this time. Ladies and gentlemen, if you're giggling along, and I can assure you, I'm watching Lebenthal, he's giggling along. Good. Giggle. That's what you should do. If you want to be a good investor, giggle at the urgency and the self-importance of the prognosticators like me who want to tell you exactly what the last 10 minutes is going to mean to your future in the next 30 years of your life, because we have no idea, but we've got a nice theory and we're articulate, right? And I can stop smiling and I can lean into a camera or a microphone and make it sound much more important than this is a performance art that we do. Pay attention to the price of fish. Pay attention to the long term. Think about all of the people who have come before Lebenthal, before me, before all the others, and said a lot of interesting things about markets that over time tend to go up, And the really rich people tend to be those old people who do very little with portfolios filled with good companies. No, they don't want to sell them. They know they might have some extra cash to buy them. But when you look at the portfolios of wealthy people, almost 2 to 1, they've got cost bases, in the single digits of dollars after 20 years. And they've got huge positions in individual names because they never sold the damn things and they just kept going up. And occasionally they get some stock splits and they got a lot of money. They got a lot of money because they bought good stuff and they didn't sell it. While everybody else was getting whipped around by the trade winds, by the maelstrom, and caught up in the emotional morass, they didn't. They said, oh, yeah, stock market's volatile today. There's a famous line in our office, and I'll shut up here, Jim, but in the middle of 2008 and 2009, my partner, Sonny Miller, who was a World War II fighter pilot, decorated captain, amazing guy, landed on aircraft carriers, took off, this guy was a stud. He was 90 years old, and people would meet him and go, guy's a stud. He's walking by, and of course, the screen is all red, and some bank was on the teetering on collapse. And he walked by, and our chief investment officer was going through and wringing his hands. And Sonny looks at the red screen and says, wow, that looks like a pretty tough day there. Wow. Hey, there's cake. We've got cake today. I'm going to have some cake. And that pretty much says it all. When there's cake, you should have cake. The market will be there again tomorrow. Jim, I just ran it on too much. But
I wish I'd known Sonny. I knew somebody like him.
God, you would have loved. Everybody loves Sonny Miller. I mean,
Yeah, I knew it. I had a friend of the same age. He's long gone. His name was Ian, and he flew P-38s and P-51s in the war. And similarly, life was grand, and like your friend Sonny, he knew where the cake was, and he had everything in perspective, which is what we're talking about here, folks. You couldn't see me while Michael was talking, but I was almost rolling out of my chair in laughter, laughing at myself, laughing at Michael in a friendly way, because we do think we know everything, and that is so laughable. Remember 3 years ago when Russia invaded Ukraine and there were all these armchair experts about nuclear war? And now we're all armchair experts about international trade. Look, this is not an invitation to be lazy and not think about things and not try to analyze, but it is an invitation to put things into perspective, that it is the long run that matters. If you try to catch every uptick, avoid every downtick in the market, you're bound to fail. I mean, Michael and I know this. We've seen it so many times. It is the greatest wealth destructor, in my opinion, is when people try to time the markets. Stay in the markets. But as Michael said, in order to do that, you've got to be in the highest quality companies. You've got to be diversified in your stock portfolio. And if something's not working, but it's still a high quality company, if for whatever reason, healthcare is not working today or staples or whatever, just give it time. Here's another thing that I'm writing for my firm today is the power of diversification as it's been shown this year. We looked at international stocks. We've had them in our asset allocations for years and years and years. And until this year, they've been terrible. But thank goodness for international stocks this year. Thank goodness for bonds, which have real after inflation returns right now. The power of diversification is real. It's important. It's what allows you to focus on the long term that Michael and I are speaking about, but you have to be in the highest qualities of companies.
There's no question, no question about it. Stay the course. Remember that the universe is unfolding as it should, and get yourself through the emotional side. Harry said he was thinking about international affairs last night and had trouble sleeping because he got so upset thinking about it. That's easy to do. Intelligent people can do that. And you look at some of these really upsetting, horrible things going on around the world, and you feel like a fool for not understanding them. I don't know how you understand them all. I'm gonna tell one story on myself. When in the first Desert Storm, Bush was president, and I was doing radio shows all the time and TV and all of that stuff back then as a puppy. I got a map of the Middle East because I knew that Iran and Iraq were next to each other, but I didn't know exactly in my head where they were on map. I couldn't have, no, that they're over there was all I could think in my head. I scotch taped the map, and I put Sunni and Shia, and I put all of this stuff and wrote all of these notes on the map, and I taped it to my monitor next to my microphone so that I could actually sound like I knew what the hell I was talking about when I had to talk about the Middle East. Why the hell am I supposed to know about the Middle East? I'm managing blue chip stocks here in the U.S. As a Sewanee English major from 1984. Holy God! But you have to do your work, and you want to learn, and it's fascinating stuff. But we're not experts in everything. We try and help folks understand the world as we try to understand the world for ourselves. Uh, anyway, Jim Lebenthal, you have a final word for Fred and Ethel? We're going to go talk to Mahaffee and find out about trade tariffs and everything else.
I feel like today's discussion is a bit philosophical. It's understandable because news events are changing rather rapidly. We've given the long-term philosophy. Your last little soliloquy there, Michael, just reminded me of a quote. You'll remember where it's from, but I'm going to read it back to you. Be passable at a party, which is what your information
Yes,
of Sunni and Shia is, but
yes,
be vital at a shipwreck.
yes.
And I think in terms of investing, shipwrecks do occur from time to time. And when Michael and I say, steer your boat for the long haul, buttress your hull with quality stocks, we're not just blowing hot air. It's the most important thing we can tell you. And if today I'm not being specific about sectors or Michael isn't, it's because things are changing so rapidly that we have to go down to the core tenets of seamanship. That's what makes all of us vital at shipwrecks.
We've exhausted most every metaphor on this particular segment of the FarrCast this morning. We were chopping wood a mile ago. We're back to the ship, and we're paying attention to the price of fish. Jim Lebenthal is a partner at Cerity Partner. Partners, CNBC contributor, my dear friend. Thank you, Jim. We're going to be back with Mahaffee. Please stay with us.
Michael Farr is the longest tenured CNBC contributor, and we'd like to invite you to a special behind-the-scenes look at CNBC. Coming on June 5th, Fast Money from CNBC is hosting a behind-the-scenes viewer experience of the live show at the Times Square NASDAQ market site, followed by an in-person meet and greet with the entire Fast Money team. Join fellow Fast Money fans for the ultimate exclusive in-person interactive event with Melissa Lee and the traders. Go behind the scenes and watch the up-close and rapid-paced Highly Charged Hour with Guy Adami, Karen Finnerman, Tim Seymour, and other well-known names. Experience how the Fast Money traders debate the hot trades of the day to help you make your investing decisions. Book your exclusive ticket today to this private event and watch the live broadcast in the Fast Money VIP screening room at the NASDAQ market site in New York City, followed by an in-person Q&A, photos on the Fast Money set, and an opportunity to mingle with Melissa Lee and the traders over cocktails. For more information and tickets for the special June 5th taping, go to cnbcevents.com and select the Fast Money Live tab. And now, back to the FarrCast and your host, Michael Farr. Thanks for being with us this week. Now it's time to go to our political analyst, Dan Mahaffee, and your host, Michael Farr.
Welcome back. Joining me now, as he does every week, Dan Mahaffee, president of the Dr. Scholl Foundation, scholar at the Center for the Study of the Presidency and Congress, and our senior political analyst on the FarrCast. Welcome back, Dan.
Thanks. Good morning, Michael.
Dan, I started with the maelstrom of news headlines with the FarrCast and suggested that 5 months into the year, the universe probably unfolding as it should, and everything seems to be okay. Stock prices are basically where they were or slightly higher than they were in January. Things are still expensive. Earnings are still coming in. Everything, in spite of the storms through which we've been and endured, are still okay here at the end of May, almost halfway through the year. Headlines this morning: the Liberation Day tariffs were halted by the Court of International Trade, and that we are seeing continued trade friction and separation with trade with China. We've seen the president ask Netanyahu not to attack Iran because now the president's making progress with Iran, but we've seen the president yell and say that President Putin was crazy because he won't listen to President Trump. And then we've got stuff on Capitol Hill with the big, beautiful new bill that had got through the House, is not going to look like make it through the Senate. And as we have to sort through the headlines, you help us understand them, but investors have to do something else. Investors have to find ways to ignore a lot of this stuff. As we help folks try to understand what's going around the world, would you start with the International Trade Court's decision to sort of say you can't do that, Mr. President?
The Court for International Trade, sleepy little body there in New York City, came out and said, look, Mr. President, you used the International Emergency Economic Powers Act. This was a tool that you said you were going to use for these 10% as well as emergency tariffs. And frankly, that, Mr. President, you can't do that, is what this court said. Now, they are immediately going to appeal it. A lot of the tariffs will remain in effect, but these are the 10% blanket tariffs, as well as what he said would be these formulated tariffs, is the ones that have gone back and forth, as well as the ones applied to Canada and Mexico in terms of fentanyl, things like that. Now, this doesn't preclude those Section 232 national security sector-specific tariffs, so things like semiconductors, steel, aluminum, areas too where they've wanted to explore pharmaceutical tariffs. That authority remains under a national security area. But basically what the court said is these things you describe, trade deficits, drug trafficking, yes, they are bad things and things that politicians should want to address. The law doesn't say, though, that the president can use emergency powers designed basically for, frankly, wartime, to usurp what the Constitution says is a congressional authority to set and arrange tariffs. So we have to watch how these appeals play out, but a significant legal failure for the administration, given their their emphasis on tariffs, and a major question mark too, given how tariffs were supposed to be a major revenue tool for this administration for these plans, economic programs, tax cuts, and other types of things.
Dan, the president's been stopped. Does he just find a way around this now on tariffs? He doesn't seem like he's going to give up on tariffs. He's just got to find another way to do it.
Right, he has to find another way to do it, and I think you see more of those 232 sector-specific tariffs that they'd like to apply, as opposed to country by country. But look, they're going to complain, one, that it's reduced their negotiating capacity country by country. Two, that they see these as legitimate concerns. And three, that the courts have now taken away a tool they wanted for revenue to pay for tax cuts and other parts of their economic goals. So all of this does threaten that plan. But again, they have to see how the appeal process plays out. Do they use other tools like those 232 tools in the meantime? But a lot of questions that need to be answered as this goes next to the appeals courts and possibly to the Supreme Court. But again, this is the court saying and referencing that the Constitution leaves it to Congress, not the president, to set these tariffs.
When the president was, or the administration was chastised for certain deportations that were not given due process and told to reverse them, it seems it was interpreted as the administration ignoring what the courts had to say. Is there any reason to think that the president won't ignore what the court has to say on this?
Well, I don't think we look at it that way just yet, because this ruling won't take effect, obviously, because it's on appeal now. So tariffs are going to continue to be collected. For the administration, business continues as normal as it's on appeal. So I don't think there's that urge to disobey the courts, but it will be a question if on appeal and even further up to the Supreme Court, if it's turned down, then does the administration seem to obey or disobey, as that question was raised on the deportation cases, is one we'll have to see when we cross that bridge, Michael.
Yeah. Well, we'll watch that bridge and all the other bridges all at once. Move to another bridge for me, Dan. You pick it this time. What are we going to talk about? You want to go to the Middle East? You want to go to the Russia? You want to go where? Or the big, beautiful bill? Pick it.
Well, big, beautiful bill. I don't think there's much to say on that other than we've talked about how state by state programs where you have these clean energy programs in red states, that's going to be a big issue for senators when they look at the cuts that the House has tried to make for them. Going around the world, when we talk about U.S.-China, I think we summed it up well a few weeks ago when we said, how do negotiations go if Trump is saying to Xi, we can fix this, you just need to change everything you're doing. That's not going to work. And what we're seeing now actually is China's further doubling down on that in two ways. One, you see that the Chinese government's moving ahead with another Made in China program focusing on semiconductors, green tech, batteries, drones, things like that, where they want to really push ahead in manufacturing, being the manufacturing powerhouse for the world. They see the administration pulling back on green tech in a time for them to move forward to further dominate that field. And also, I don't think a headline that got as much attention in the U.S., but BYD, the Chinese electric car company,
Yes,
has lowered the cost of their lowest model to $7,700 for an electric car. And now I don't think I would want to get in one of those in a head-on with an American semi-truck anytime soon, a $7,700 car. But think of what that does to set the global price of this, because if you look at a company like BYD, they're now making cars like smartphones. And look what Apple did when they were able to set $1,000 roughly as the price for a smartphone. BYD is looking to do that for the cars of the future, and that's happening in China.
I could go out and buy 7 new iPhones, or I could have a car. Is that what you just told me? I could have a car, or I could get 7 new iPhones.
Yes.
Wow. Wow. Average price of a car in this country is around $40,000 now, maybe 45, moving up. seven
What's a
thousand
used car
dollars.
now? 22, 18. It's
I
nuts for
yes,
anyone wanting to get a car.
yeah, no question. Okay, so all of that continues to unfold. The big beautiful bill has to get through the Senate. Come back to me, Dan. Is it what gets through the Senate? And where I'm reading from my friend Greg Valliere that in the end, when we have to have some sort of extended continuing resolution on spending, when we hit the budget cap, spending cap, that it will get passed in some form and will get extended, but it might not be till the fall. Do you agree, disagree? What happens?
Yeah, the timeline looks like no one has the appetite for a shutdown or default, so there will likely have to be some sort of patchwork measure. I don't know who tries to get their pound of flesh out of that, given the short margin, but that does seem like something where uh, Democrats could even though want to get leverage on, does the administration follow court orders or something like that. They've talked about when do they act, but no one wants to mess around with default, so I think you do get that patchwork. But the Senate really wants to push back on some of these cuts. Green energy and Medicaid are things that the senators are going to have a harder time cutting, and that's what a question of those were the big things that allowed the House conservatives. So ultimately I think this gets through in the end because President Trump probably will be less focused on the details and more focused on an accomplishment and just simply bang heads together at the end when we're near the finish line to get this bill done.
Dan Mahaffee from the Dr. Scholl Foundation, the Center for the Study of the Presidency and Congress, and our senior political analyst on the FarrCast. I'm always smarter when I get finished talking with you, Dan. Thank you very much.
Good to talk to you, Michael. Likewise.
We'll be back with Josh Huminski, and we're going to dig deeper into international affairs. We're going to dig deeper into what's going on with Putin's Russia and figure out if indeed we should be pulling back and giving Iran something of a second chance, something I think they haven't earned or shown that we should trust them about anything ever. And that goes back to my childhood. When we come back on the FarrCast.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. Thank you for joining us on the FarrCast. And now, back to your host, Michael Farr.
Welcome back to the FarrCast. I'm Michael Farr. Thanks so much for being with us here on the 29th day of May, 2025. Here we go, Season 8 of the FarrCast covering Wall Street, Washington, and the world. As we get to the world, we're going to go back to our old friend Josh Huminski this morning from the Center for the Study of the Presidency and Congress, where he runs the National Security Institute. He's just back from Europe. He has some insights for us on what's going on with Ukraine, but we're going to also take a trip around the world with Josh this morning. Good morning, Josh. Welcome back.
Good morning. Great to be here. Thanks for having me.
We're glad you made it back and had a good trip over to Europe. You were in some of those former Soviet countries while you were there. Tell us where you were. Tell us what you learned, please. And we've still got to get to the Middle East, please. So we got to keep this tight this morning.
Yeah, absolutely. I was over in Sweden, Finland, and Estonia. Estonia being the former Soviet Republic, talking NATO, talking European defense and security. And it's fascinating to see the extent to which you have Europe responding to the president's signals about the need for Europe to stand up and take care of its own defense and security. We're looking at the NATO summit in June, so basically about a month from today. And it looks like President Trump is probably going to get his 5% commitment of defense spending, which is going to be very interesting. The idea is getting Article 5, 5% for Article 5, as one person told me. But it is a belated recognition that Europe needs to and indeed can stand up and do more for its own defense and security and rely less on the United States. So it is interesting how the conversation has shifted these last few months.
Is this a success? Is this a win for President Trump that he's pushed NATO to actually spend money on the NATO countries and the United States has to bear less of this bill? I mean, we're not hearing much about that, but that sounds like a pretty cool step as far as I'm concerned.
It is a very big step. It will be a win for the president, but it's also important to recognize that's not just a response to the president, although that is a big factor in this. It is also a very late recognition of the growing threat that Russia poses to Europe and concerns about if the Ukraine conflict winds down, what that will mean for the Russian disposition of forces. The big concern, especially in Finland and Estonia, where I was that if the war in Ukraine stops, Russia will reallocate those forces upwards of 300,000 along the eastern flank of NATO. They reconstituted the Moscow and Leningrad military districts, which for the important part for your listeners is that they're building facilities and bases along the eastern flank of NATO, which they hadn't really done before, and that those 300,000 forces will go from Ukraine to those bases and pose a potential conventional threat to Europe, but more importantly, we'll just be able to put pressure and change the calculus for NATO. So it's a win for the president, but it's also a very late reaction to what's been going on with Russia and Ukraine.
I've been reading that Russia has lost over 100,000 soldiers' lives in the war with Ukraine. Is that an accurate number?
I suspect the number is actually higher now. We don't really kind of have full insights, although if you look at what the Ukrainians are reporting, the casualty figures are significant. But what's also impressive to note and alarming to note is that the Russian military that exists today is larger than the Russian military that went in February 2022. They have been able to regenerate those losses, re-equip the forces, and what they're also doing, according to the people that I was talking to, is producing modern tanks, so the T-90s and T-14s, and taking those and putting those into storage. So the equipment that is going to the Ukrainian front is not necessarily the latest and greatest, but they are able to sustain the equipment and personnel losses likely at this rate for the foreseeable future.
Talk about the readiness, please, of the Russian military for me for a minute. This is an area of Josh's expertise. We were hearing a while ago, a year ago, that Putin was emptying prisons and anybody who could stand up and hold a gun over the age of 15 and under the age of 60 was being put out there, ill-trained, ill-equipped, and they were basically just cannon fodder, including folks from North Korea, also cannon fodder. How much is cannon fodder and how many are real soldiers?
Well, you have to look at the fact that the Russian military is divided into two parts. There's the conscript force, and then there's a contract soldier force. The contract soldier force can't really deploy without an actual declaration of war. Excuse me, the conscript force. The contract force are basically the soldiers that can go forward and deploy, and those are the ones that you're seeing in Ukraine. Those are the ones that are acquiring the high signing bonuses and payments and whatnot. So this cycle, as we've seen, is we talked about casualty figures last year. Is can Russia sustain this? Clearly, they can, and it looks like they can continue to do so. The three-part problem you really have to look at is the first part I discussed before is that force reallocation. So taking those forces out of Ukraine and repositioning them along the eastern flank of NATO. It's also the regeneration of forces, so the additional reconstruction of equipment and the development of new and modern kit. But it's also the reformation of the Russian military that is the real big concern. That you have to look at the fact that the two most battle-hardened forces in Europe right now are the Ukrainians and the Russians. The Russians are not dumb. They are a learning force and a learning institution. So while they may be losing alarming rates of NCOs and lieutenants, I think some of the figures are incredible, the equivalent of 10 divisions worth of staff that you would need for that mid to junior officer corps staff.
How
Not the
many
actual
people for
number.
our non-military people? What's a division?
So you're looking at about 10,000 for the Russians, but it's not the I didn't describe that quite well. So the number of lieutenants you would need to staff a division, they've lost about the equivalent of 10 of those,
Okay.
according to reports.
Okay.
So the fact is that that middle core, middle layer of military leadership is basically wiped out. But that being said, the Russians are learning. They're deploying new and novel techniques with drones, electronic warfare, and everything. So the Russian force that exists today is amongst the best trained in Europe and the best battle hardened. And that is what the Europeans are particularly concerned about as we go to 2027 and 2030.
Where'd they get the people to do it? I mean, they were scrambling. We heard heading, emptying prisons. What happened in the past 12 months that made that happen?
I think part of it was a fixation of a misunderstanding of what was happening on the ground and what was happening within Russia from Western media perspectives. They like to focus on the, as you said, the emptying of the prisons, which Wagner was doing and other private military corporations were doing, and ignoring the fact that they were still recruiting and retaining large numbers of both conscript and contract soldiers from the Central Asia, from the Caucasus, from areas outside of Moscow and St. Petersburg. I mean, you have to remember how big Russia is in terms of a country and how large of a population it does have to draw upon. And for those outside of the wealthy parts of Western Russia, if you're looking at, 25, 30,000 rubles as a signing bonus, I don't know what the exchange rate would be right now. I know the tanking currency hasn't been helping, but that's a pretty attractive option for your future as opposed to doing nothing.
About 145 million Russians. That's the population of Russia right now, more or less, 145 million. Population of Ukraine, Josh, do you know? I don't, I'd have to look it up.
Offhand, I don't know.
Looks like just a little bit less than 40 million. I've got a couple of estimates here from 2023, 2025. Obviously, they haven't done a census in a little while, so 39, 40 million, good number.
Okay. Josh, how long can Ukraine continue to keep its army in place? Do they have enough people hired or conscript, as you say? What does that look like, and how long can they keep going? And when does NATO really come in with more of a powerful force? And will the U.S. show up?
So there's a lot to unpack in that one. So the Ukrainian casualty figures are a very closely held secret, as you would understand, but they are significant and high. All the anecdotal reporting that you're hearing coming out of Ukraine is that the Ukrainians need a break. I mean, the ceasefire, more than anything else, is to give the Ukrainians a pause to rest, recuperate, reconstitute, and redeploy. You're hearing some reports of desertions and conscription issues and things along those lines, which after going into the fourth year of war is not necessarily surprising. The key factor, as you identified there, is what does NATO do for Ukraine, and what does the long term look like? If you can have a strategic pause, if you can have a ceasefire and allow the Ukrainians to reconstitute their own forces, to regenerate military capacity, and turn the country effectively into, a hedgehog or a porcupine, as some people have suggested that we do, then that's a different situation on the ground for the long term. That's potentially much more viable. At the current rates, the balance of weight, if you will, is in the Russians' favor. They're continuing to grind forward against the Ukrainians. The reports suggest that the Russians are massing forces outside of Sumy, that they basically have pushed out the Ukrainian counteroffensive into Kursk. And this really is what it looks like that President Putin is playing for. It's just playing for time and advancing the grinding offensive in the eastern part of the country. And hopefully that either the United States will sort of lose interest, or that they'll just grind the Ukrainians into the ground. Now, to your question about will the United States introduce forces? No, I do not see that happening. And even the coalition of the willing, which was being led by President Macron and Prime Minister Starmer, which was discussing introducing a security guarantor force between the Russians and between the Ukrainians, that's largely gone quiet. And I don't think that's necessarily viable without the commitment of countries like Germany and Poland, which have expressed reservations about doing so. So, as long as NATO keeps providing assistance, particularly the long range precision strike, we just saw the removal of range restrictions on weapons like the Storm Shadow, the ATACMS, which are the American long range missile. That gives Ukraine additional capacity, but we also need to keep in mind that there's only a handful of those weapon systems in play right now. So we are likely going to have this conversation again in 6 months.
I've been reading that in terms of domestic politics in Russia, Putin needs this war to continue. This war ends too quickly. He's got economic problems and domestic problems, and he needs focus to continue. So the grinding on at the cost of certainly weapons and economic investment and lives somehow is worth it to him politically. Is that an accurate statement? Am I interpreting the stuff I'm reading properly?
I think the situation we need to keep in mind is that Russian politics is not necessarily the same as Western politics, or certainly not American politics. President Putin could, in theory, call it a day and say, I've got the four oblasts, I've got Crimea, Ukraine is not going to join NATO or the European Union and call that a win. His maximalist objectives can certainly shift, and that will change. On the economy, the Russian economy was supposed to collapse in 6 months, 6 months ago. It was supposed to shut down in a year's time, a year ago. I think and I use the we in the inverted commas here, have a tendency of overestimating our understanding of the performance of the Russian economy and its ability to continue ticking along. They have increasingly dedicated more of the economy to defense production versus consumer production, but it is not yet fully on a war footing. That has a very specific connotation and would be very concerning for for NATO, to say the least, if that were to happen. And it's becoming a simple fact of life. I mean, actually, according to polling that the FT just released, I believe within the last day or two, 40% of the Russian population hasn't seen their quality of life or economic outlook change, and 20% has actually seen their quality of life go up. Only 40% of the population has seen any sort of material change in their quality of life or economic outlook, which is pretty significant where it stands right now. So,
Wow.
does the economy need to keep ticking along like this? More than likely, because this defense production has to go somewhere, and you can't easily just switch it off back to consumer production. But we're also ignoring the fact that the Russian state and the Russian economy under President Putin can do a lot of things that we wouldn't necessarily be able to do in the West.
Right. Okay. So I'm learning a lot here, ladies and gentlemen. I hope that you are too. Josh, you've now been to Europe. You've been closer to it. You're following it very closely. Tell us what Ukraine and the Russian war and conflict look like a year from now to you, please.
That's a very good question. I suspect in 6 months' time, we'll probably still be having this conversation. What we've seen in the last 6 months since President Trump has basically come into office, or sort of 5 months, if you will, he's reset the equation, at least with the Ukrainians, which is very interesting. He's basically said there's a new sheriff in town. You're not going to get the blank check that you once had. I mean, the Oval Office showdown was, I think, most significant of that. And President Zelensky responded in kind, agreed to the critical minerals deal and the investment around that. And President Zelensky is attempting to present himself as a constructive partner for peace negotiations or ceasefire. They presented their peace memo ahead of the possible meeting out of Switzerland or Istanbul, and now we're waiting on the Russians. President Trump has come out and said that he thinks that the Russians and President Putin are sort of tapping the United States along, I think was his turn of phrase, and that he's very upset with the large scale drone strikes that have taken place. So the big outlier is, what does President Trump do, and does his patience, which I think is rather interesting, we haven't seen his sort of patience anywhere else, with President Putin continue? And then if it does run out, what does he do? There is a Senate bill which has about, I believe, 82 signatories that would slap 500% tariffs on any goods that come out of countries that import Russian oil, which would be significant. And that's a heck of a card to hold in your deck if you are looking at doing some sort of maximal pressure against Russia. That has not gone forward in the Senate just because they want to have approval from the president that he'll sign it. So the big variables are really, what does President Trump do? And unfortunately, we don't really know yet, and we haven't really seen what the president is willing to do to increase pressure on President Putin. And that's the big variable.
Mahaffee introduced us to a new term this morning, which is taco. Trump always chickens out. Taco. Someone asked the president about that last night, and he said it was a very nasty question. Shocking. Is there something to this notion of taco, that the president chickens out? And will the president chicken out with Putin, or will he try to show that he can stand up to him? Is he seeing this as enough of a high-profile challenge?
So I don't buy the whole taco argument, to be honest. I think the reality is that we're having to relearn the art of the deal in the age of President Trump and President Putin. We're going back to a sort of Manhattan-style negotiation that's not really amenable to Vienna ballrooms.
What does that mean, a Manhattan-style negotiation, please?
It's rough and it's tumble, it's hyperbole, it's over the top, it's instantaneous sort of reaction and bluster, as opposed to very finely worded communiques that are delivered over, exquisite china, and Louis the 14th cabinetry.
This is not Henry Kissinger's form of diplomacy, is what you're saying?
Yes, yeah, it's not Metternich, it's not, Bismarck. It is rough, it is tumble, and it is an unstoppable force and an immovable object.
I can hear people scrambling, going, figure out, let's look up who Metternich and Bismarck were. Quick, quick. I remember Bismarck. Who the hell was Metternich? I got to go check. Go ahead, keep going. I'm sorry. I
So
just,
it's
ladies and gentlemen, I just want you to know that I hope you're not as stupid as I am. And I certainly, that's just what I thought. I got to go look up Metternich. I remember Otto von Bismarck and what happened there. Go ahead. Sorry, Josh.
So I think this is where we find ourselves today. Is first we're relearning how to conduct diplomacy with Russia, which is not something that we have done under President Biden, because after the full scale invasion of February 2022, everything stopped. So now we have President Trump, who is not, your traditional diplomat. He's operating by a truth social. He's operating by gut instinct and feel. He will make a very expansive demand. I think is illustrative with the 5%, for example, with NATO defense spending. The original discussion is that if he got 3.5%, that would be a win. And now it looks like he's going to be going to Brussels, excuse me, to The Hague in June, and the United States might actually well get that 5%. So this is having to learn how to conduct diplomacy and negotiation at a very difficult time with two very dynamic personalities.
And diplomacy doesn't even seem to be the right word, Josh, when you think about President Putin and President Trump. Diplomacy sounds nice. I mean, it sounds civil. It sounds, and this, as you point out, is a new take on the art of the deal, and maybe some of that's getting made up as we go along. I'm
Mhm.
way out of time already, and this is fascinating. Give me a quick jump, please, to the Middle East, and what I'm most interested in is President Trump's call to Israel not to attack Iran because he's making great progress. Do you believe it? What's good enough progress when they almost have a nuclear bomb, for God's sakes?
Again, this is, I think, relearning the art of the deal in the age of President Trump, now just in the Middle East. When we have to go back and look at the original JICPOA, the original nuclear agreement, which the Gulf states and the Arab states were adamantly opposed to under President Obama because he did not consult with them. They were quietly saying they wanted the deal to fail, and then President Trump pulled out in 2018 because it was a bad deal. It gave something like 900, was it $1 billion to the Iranian government, which we had impounded for effectively doing nothing. Now, fast forward, you have the UAE and Saudi Arabia wanting the president to make a deal with Iran to cool down tensions, particularly because they are concerned about the risk of fallout from a Israeli strike against the Iranian nuclear complex. So the whole situation has changed from 2018 to today. And we also have to remember that October 7th, the horrific attacks, the horrific massacres that occurred from Hamas have fundamentally set in motion a reset of the geopolitical chessboard from Iran's perspective. If you have an H in your name and you're Hamas, Hezbollah, or the Houthis, you have basically gotten schwacked, for lack of a better phrase. And that has removed Iran's proxy forces from the chessboard. And at the same time, Israel feels, and not without reason, concern about the existential risk of Iran's nuclear program. So that's the background. Can the president get a deal? It remains to be seen, because it seems like the red lines that the president has, and Special Envoy Witkoff has basically been saying, is that there can be no enrichment, that is more than likely a bridge too far, because the Iranians have said we need enrichment for our peaceful nuclear reactors, if you will. But as we know, there are dual purpose capabilities there. So we'll have to see what comes out of the agreements. I think having conversations is better than not. I mean, we have to remember that communication is diplomacy, that is statecraft. So trying to get a deal is better than not.
There's the political situation in Iran seems to be more in flux than at many other times in my life over the last 60 plus years. So, is there something there that can be taken advantage of, or should the world do whatever's necessary militarily to put a stop, an absolute certain stop, not diplomatically, to that nuclear threat?
So I think being able to put an absolute definitive stop to Iran's nuclear program will be fundamentally impossible. There is no way short of a full-scale invasion, which nobody wants, to remove the nuclear capacity. I mean, Iran learned the lesson of the Osiris strike that the Israelis conducted against the Iraqis in the 80s. To bury their nuclear program, the strikes against the Syrian reactor, and in the 2000s that the Israelis also did, said you need to bury your program. You cannot
When you
do
say bury the program, what do you mean? You mean literally?
literally bury the program
Yes.
underground.
Yes.
80 to 100 plus meters underground that even our massive ordnance penetrator can't reach. So it is impossible to fully guarantee that you can do so. This is a window of opportunity, though, as you said. The Iranians feel vulnerable. The Israelis basically eliminated most of their strategic air defense in operations earlier this year and the end of last year. So they're vulnerable.
Annie
There's a window
Jacobs,
of
by the way, in her book Nuclear War, suggests that yes, you can't reach them with one nuke bunker buster, and you might not reach them with two, but if you land 15 on them, you'll destroy any damn thing you want. So the capacity is there. I'm quoting Annie Jacobson. Farr's expertise in nuclear war. I got to go back and check my Bismarck. So don't take too much here either.
I think you need to dust off Herman Kahn if you're going to be doing anything on nuclear war.
You think Annie Jacobson's wrong?
I think Annie Jacobson is a good author. I enjoyed reading Nuclear War. I thought it was very good for illustrating the time pressures and sense of urgency that can happen in a nuclear crisis. I think her scenario was a bit far-fetched, and done for thriller purposes.
It was. I'll give you the far-fetched part, sort of, but it wasn't. You could see it sort of happening. It wasn't overly outlandish. I didn't need to have the president die in the woods after jumping out of a helicopter. That might have been a bit much,
That might have
but
needed a spoiler alert there, Michael.
oh, sorry, folks. Sorry. That was a little. Yeah. I mean, you can cross over the line to James Patterson pretty quickly in some of this stuff, but the timelines for what would happen and the impact of those nukes and who would make decisions and when, and the timeline for those decisions is
Mhm.
critical, and it's awful. It's a terrifying, terrifying book. Okay, so you don't think we can actually get to them? I mean.
I think
The,
we can. I mean, to be clear, I mean, I think we can definitely set the program back. I don't think you could ever definitively eradicate that program to the degree that would provide the measure of confidence to go forward.
To go forward with what? Like acting like they couldn't launch a nuke at us?
Yes.
Oh, that's a shame because they've
And
done
also
nothing.
not necessarily at us in inverted commas, but our bases in the Middle East, Israel, our interests across the Gulf.
That
I
would
mean,
be one of those tactical nukes that Putin keeps talking about.
no, it's more the fact that you can set the program back, but I don't believe that you can fully eradicate it.
Joshua Huminski at the Center for the Study of the Presidency in Congress, and a very smart guy. I always learn so much, and I always feel so stupid when he's on, but a little bit smarter after he's on. I'll be killer at cocktail parties this weekend now. Thank you, Josh.
Thanks
Ladies
so
and
much for having
gentlemen,
me.
that's it for another FarrCast as we cover Wall Street, Washington, and the world so that we can better understand things. And boy, we've done it this week. I really feel pretty good about today's show. And Josh Huminski did just a fabulous job. Tomorrow is my parents' wedding anniversary, and I was talking with Dad about it last night. My mother passed away 9 years ago. My father is 99, and I said, "Do you remember, Dad, where you had your first anniversary dinner?" He said, "No, where?" I said, "You had an apartment at the Riverview Apartments, a building he built in Roslyn, the first apartment building in Roslyn, Virginia, overlooking the Iwo Jima and back at the memorial and back at the." He said, "Yeah, right." And I said, "Dad, do you remember who was there at your first anniversary dinner?" He said, "Your mother." I said, "There were three people there." He said, "Who else?" I said, "You, Mom, and me." I, I, they were married May the 30th. I was born April the 24th, 4th. I don't remember that dinner very well, but I know I was there, and Anyway, we had a great time yesterday talking about it. Dad's a World War II veteran, and he'll be 100 in October, God willing. We had a nice chat last night. He had steak, baked potatoes for dinner, and he didn't eat his salad. He says, I don't like salad. The hell with it. I'm too old to have to eat salad. That was his line last night. I don't know if you're old enough not to eat salad, folks. I'm still eating my salad with that sort of genetic promise potential there that I may need to eat salad for a few more years. I hope you have a great weekend, and we will be back again next week to do it all again, covering Wall Street, Washington, and the world. From my producer, Harry Jennings, everybody at Hightower and Farr Miller in Washington, thank you. Please share us on your social media. I'm grateful to you for listening, truly. I'm Michael Farr. See you next week.
That's a wrap for this week's episode of the FarrCast. We'd like to thank you for listening, and thanks to our guests, Jim Lebenthal, Dan Mahaffee, and special guest, Joshua Huminski. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly for free on all major podcast platforms, including Spotify, TuneIn, and Apple Podcasts. Please be aware that anytime we or any of our guests mention a specific company, sector, or refer to performance in relation to an earnings report, news headline, or economic trend, it is not a recommendation to buy or sell. Review the risks and rewards of any investment with your financial advisor for what specific investment and general strategy is appropriate for you before you make any investment decision. And if we can be of assistance here at Farr Miller in Washington, please reach out to me at hjennings@farrmiller.com. We are here to help, and I'll be happy to put you in touch with one of our investment professionals to help you navigate your financial course across the changing investing environment. We are grateful for all of your notes and comments, and we try to respond to as many as we can. Please keep those emails and messages coming. We'll be back with you next week. Till then, take care, stay safe, and stay healthy. I'm producer Harry Jennings, and thank you again for listening to the FarrCast, Wall Street, Washington, and the world. Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, and a SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr Miller in Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.